And I think eventually the Fed is going back to printing. Heck, we even saw the Bank of Japan after they talked tough and said, we're not going to do anything. They intervened and actually bought bonds like a day after saying they were going to YCC it, lose the yield curve control. So the Fed will be forced to because of the U.S. debt, and that's the only way is to print more money ultimately and kind of get things started. And that is ultimately the golden ticket for Bitcoin.
Today, let's welcome Gareth Soloway, Chief Market Strategist at the Money Stocks and President of Verified Investing. With his insightful analysis, Gareth sheds light on the surprising resilience of this year's economy. I anticipated faster shifts, even with gold surpassing Bitcoin, Gareth reflects. He identifies excess COVID savings and delayed interest rate impacts as driving forces behind the prolonged economic strength. Gareth's expertise extends to gold, revealing a breakout in bullish signs. Amidst global uncertainties, gold's allure grows, amplified by the weakening dollar and potential recession, prompting questions. Will gold shine by year-end? Gareth Soloway's perspective guides us through this captivating financial narrative. So don't go anywhere. Keep watching till the end.
So one of the things that most people don't know, and I didn't know this a year ago or so, is that to get the GDP number, you take out imports, right? So you subtract out imports. And one of the things you'll see if you look at a chart of imports is that U.S. imports have fallen to their lowest level in quite a long time. And so the lower imports go, the less it subtracts from GDP and will artificially raise GDP. So it's not to say that the economy is not expanding, but I think it's a little bit on the false narrative side to say it's expanding as rapidly as people are thinking. And again, if you look at what precedes recessions, a drop in imports is one of those indicators that tells you something is amiss. Yeah, and so I'm one of those people that I thought it would happen a lot sooner. In fact, I thought gold would be the far out performer for the year. I thought it would even be Bitcoin. Now, we still have time left in the year, and I still think the NASDAQ and so forth will come in. But I've been surprised at how long of a period the economy has stayed strong. And I think there's a couple reasons for that. So one of them is that excess savings from COVID has really played a role in elongating this kind of positive economic period. The other part I would dare say is probably in line with kind of the idea that there's a lag in interest rate policy of 6 to 12 months. If you go back 12 months, the Fed funds rate was only at about 1.5%. And so we're now at 5.25 to 5.5. And so again, if it's an elongated period because of spending and you look at the lag effect of federal funds hiking, then it does make sense why it's probably lasting a little bit longer. And I also think, by the way, coming into this year, all analysts were saying this is going to be a horrible first half, which had everyone on the wrong side of the trade. And so there's been this catch up where fund managers and retail investors have legged in and kind of brought their portfolios back to normal. And I think that's also helped in this run in the stock market. Well, it still looks like there's a correlation. It's just that, unfortunately, the interest in Bitcoin has fallen dramatically and institutions are not stepping in versus over here, the NASDAQ clearly has been the recipient of so much money flow. So my fear is that with less interest in Bitcoin only driving it up this much versus where it was at the all-time highs and so much interest in stocks, if that were to reverse, do you see more panic hitting Bitcoin and driving it back to the lows? I mean, for all we know, maybe the NASDAQ only pulls back to 12.5, but Bitcoin just alone would then go back to the lows. So I think right now there's still a risk on, risk off correlation there with the stock market. But I do think eventually it changes and becomes the digital gold that we all hope it does. I just don't think we're there yet. People in the crypto industry are way too emotional for us to be back to be at digital gold yet. And I think eventually the Fed is going back to printing. Heck, we even saw the Bank of Japan after they talked tough and said, we're not going to do anything. They intervened and actually bought bonds like a day after saying they were going to YCC it, lose the yield curve control. So the Fed will be forced to because of the U.S. debt. And that's the only way is to print more money ultimately and kind of get things started. And that is ultimately the golden ticket for Bitcoin. Well, so far it's doing all right, but it certainly isn't the top performing asset. There's no doubt that the stock market and Bitcoin have far outperformed, but at least in terms of risk, you've kind of been able to cushion any sort of risk moves. Now, for me, this is a breakout short term on gold. We see this trend line here. We had a breakout retrace to what the scene of the crime is. This is a usual retrace, and now we're making another bull flag. I still think we take out the all-time highs on gold by year end, but again, it'll be interesting to see where the Bitcoin chart is and where the S&P is at year end to see, does gold pull it out in the last months of the year or not. I think that's exactly right. And in fact, that makes sense that we're trading there because if we look at the US dollar, the dollar here, the Dixie, it broke down from a long term trend line of support. It broke, it did a classic retrace today, in fact, hitting the scene of the crime right here. But this is a longer term trend break on the dollar, and a weaker dollar is good for gold. I also think that it's probably a scenario where we're getting closer to a recession by year end, and the Fed may have to think about lowering rates, which is also positive for gold. I also think inflation still remains slightly elevated in that scenario as well, which is also good for gold. So I do think by year end, you're seeing a very good pop on gold. Take a look at that. And again, look at what's happening. We've hit this line or kissed this line multiple times. Just in the last few days, we've started to pop above on the URNM. This is the Sprott Uranium Miners ETF. And the case here is very simple, is that, we're seeing record temperatures all over the globe. There's going to be more and more people calling for alternate energy to gas, coal, and oil. But to be honest, it's not feasible to make enough solar panels, or is it cost effective? So I think there's going to be a new push for uranium and nuclear power plants. In fact, I think one just came online just in the last few days. And I think that is potentially the next big trade here with inflation elevated or staying elevated. Look at the uranium side of things. I think it's a potentially great trade here. Yeah, I think it's somewhat immune because, again, it's not so much oil and oil consumption, but it's the move, the political move, the pressure to move to a sustainable alternate to oil and gas. And I think that's going to be gaining momentum. The more and more people, I mean, again, hearing about Arizona's heat wave that they've been through in some of these other areas, and even in the Arctic and so forth, there's going to be more and more pressure all over the globe to move towards uranium or nuclear power. So I don't think it's going to be as affected by a global slowdown as people might think. And I think it's a very good place to potentially even protect yourself in. Yeah, I think anything that BlackRock does, you have to take note of because they're such a massive player in the financial industry. So I think it is interesting, and I do think there's this switch. I think geopolitically, there's a huge shift here away from the need to always be on this ESG side to being more of a balanced portfolio and kind of looking at all sides. And I think, again, the political spectrum in the U.S. shows that it's 50-50 at this point. So you got to handle both sides of it. You'll see a lighter touch by the administration over the next 12 months going into the elections on oil restrictions and drilling, just because, again, it's politically advantageous to lower oil prices. So I think that's part of it. And I do think that, ultimately, you'll see more investment in oil and gas. Absolutely. Yeah, and I think that the key is here is oil's already run up, right? I mean, not to say it can't go to 90 or 95, but I always look for things that are just starting their moves because the risk reward is greatest there. And right now, uranium is tops for me.
Thank you for joining us in this enlightening discussion with Gareth Soloway, a true market visionary. His insights have unraveled the complexities of our economy and offered a fresh perspective on gold's potential ascent. Keep an eye on our channel for more thought-provoking analyses and expert interviews. Don't miss out on the latest updates. Subscribe now to empower your financial health. Together, we navigate the dynamic world of finance. Once again, thank you.